Yo, how's it going, you guys? It's Marcus Traber. So let's talk about when is a good time to buy more PSTH shares. What is a good price to start a position within PSTH? None of this is financial advice, but let's take a look and break down the deal to essentially find what the intrinsic value could be today. And also, if you want to follow me on StockTwits, I do post there, and I'm starting to post more about PSTH. And we can see that basically on Friday, I talked about that it looked like we were starting to find support around these levels, and that I happened to like the massive dump that we were seeing that day. And I happened to take advantage of that and buy 66%, over 66% more shares than I already had. And so we can see here, I drew this line right here, and price was dropping, and currently in free fall, as we can see here, was $21.50 or $21.51 when I posted this. I posted this pretty quickly, and we can see that in terms of the charts, we see that price actually went to this line and a little bit below this line, and prices went as low as $21.33. So definitely check me out on StockTwits if you're interested in this kind of updates. And also, if you are interested in cryptocurrencies, definitely check out the link in the description down below for BlockFi. I'm a partner with BlockFi. You can get up to 250 in cryptocurrencies. And if you get any value from this content, don't forget to put a smash down on the like button. It really helps this content. And if you haven't already, consider subscribing to this channel. I'd really appreciate it. Okay, without further ado, let's take a look at the current valuation of this deal. And let's start out with UMG. What is UMG worth? Where do we think it's worth actually? So 5 billion euros. What does that even mean? It actually is $42 billion. Okay, so using $42 billion, and let's take a look at the valuation basically from other folks. Goldman Sachs thinks it's 53 billion, and this was back in April 29th, so this is pretty recent. So let's take a look at using that data, 53 billion, and so it's 42 here, going to 53. So we think that basically this should go up 26%. And let's just take a look at 26%. We're going to not include the decimals to be a little bit just more conservative. Also, keep in mind that 53, we don't exactly know if we're dealing with an enterprise value or not. So these numbers could fluctuate a little bit. But again, these are just rough estimates that we're looking at right now here. So if we look at $14.75, which that is the amount that each share of PSTH will get of UMG. So for each share, we think it's undervalued potentially by, again, 26%. So we are timesing 14.75 by 1.26 to increase it by 26%, and we get $18.58. Okay, so if you're following that so far, looking at the chart over here, except we're just going to be drawing stuff here, we can do PSTH here. And basically, okay, so that was a lot of information, and I said that all pretty quickly. But looking at this, we know that the NAV level is right around 20. This is the risk. We need to know what the reward is, and the reward is somewhere. We just don't know where that is. And the risk at the moment is 20, and the current price that we're looking at right now is $22.06, right? So that is the current price. All right, so having said that, let's take a look at basically, we have a price right now of $22.06. Okay, so that is the current price. Now, what price should it be at the moment? And what price basically is this a good price to buy it? And how do we know if this is a good price to buy it or not a good price to buy it? Okay, so we talked about that the components of this $20 deal essentially was $14.75. And so instead, we're going to use $18.58 because that's what we think that UMG should be worth. So let's do $18.58. Okay, so $18.58 plus the cash value of $5.25, because this $20 of a PSTH is $14.75 plus $5.25. That equals to 20. So, and then what is the value of this basically? This is basically, when we go over here, we're talking about the fair value. We think this is the fair value, what it should be worth today, okay? And this is also based on the merger details and assumptions there. Okay, this is the fair value. This is what it's worth today. So we're going to find out what the difference is basically. So this is $23, just doing some complex addition here, and 83 cents. Okay, so this math here, this equals $23.83. So there is clearly a difference between 2206 and 2383 cents. This difference right here is close to, not quite, we're looking at something like 1%, a little bit less than 1%, but roughly a 1% difference. Again, it's a little bit less than 1%, but we're going to call this a 1% arbitrage opportunity potentially. Let's break this down a little further. We're talking about two components of this deal so far, but there is a third component, SPARC, right? So this is something that definitely has a value greater than 0. But with our current formula here, we are assuming that this is actually 0. This is something that has a greater value than 0, so we're going to actually put a plus here. So 2383 plus. All right. Now, this value here, maybe the valuation of this part is actually 0 today. This is something that actually will grow over time, and we'll kind of figure out what that value is. There could be hype around this. This could go overvalued in terms of it could be worth more than it should be worth at some point in the future as well. Keep this in mind. So at the moment, in terms of the data on hand, and in terms of what we have right now, the knowledge here, this is going to be something that right now is greater than 0, but we're going to leave this at 0. Instead of giving an arbitrary number of maybe 50 cents or a dollar. We don't know what that is worth today, and we're going to keep it at 0 from at the moment, but keep in mind that this plus right here is for this. Also, keep in mind that this $18.58, this could be something that, yes, this is more the fair value. I think that Bill got a good value basically for this deal for UMG for that 10% stake. And we're talking about like what Warren Buffett paid for Snowflake. That's kind of what we're getting for UMG. This is my opinion here, right? Now, in addition, when UMG shares hit the market, is it going to be trading at $18.58? It's going to be trading below that, or is it going to be trading above that? If I had to guess one of the three, I'd say that probably it's be trading closer to $18.58 or even higher, maybe closer to $20 a share. This could also be a conservative number. Just know that and be aware of that. So this number here, we're not trying to go for what I think this should be worth. I think this should be worth significantly more in general. I think that SPARC is undervalued here. I think that this is still undervalued here, but we're talking about what it is worth today. And where do we think price is going in the near future and why? And also keep in mind that this is a deal that's happening in the future. There are a lot of deals that are happening in the future that cause basically these arbitrage situations to occur. And what do I mean by that? Well, take a look at right now AMD and Xilinx. AMD is acquiring Xilinx. Right now, Xilinx, if you wanted to buy AMD, you should just buy Xilinx. This is not financial advice. But for example, there is a arbitrage opportunity at the moment where Xilinx is trading below the conversion rate to AMD. Now, this is not so uncommon. There are a few different factors why this actually occurs, actually. There's risk of the deal not going through, okay? This is always there, even if it's very low. And with AMD and Xilinx, it's pretty low. But there's risk, and there's also time. So we have time also. And time is, in my opinion, the main factor of why Xilinx is trading below basically where it should be trading to be a 1-for-1 to AMD. But this is not a uncommon scenario. I also saw this, like if this is your first time around the block, maybe you just don't know this, right? But if you've been in the market for quite some time and you've seen these stocks, like another stock, for example, AbbVie, and AbbVie is a stock that I happen to really like, just by the way. So when AbbVie was acquiring Allergen was trading at a discount. So you could buy Allergen and basically get AbbVie shares for cheaper. Now, there was a little bit more of a risk, arguably, in that scenario. In my opinion, not knowing too much about the deal right now with AMD and Xilinx, but I would say that there's more of a risk for Allergen deal not to have gone through than for that deal. Now, none of these deals compare to the what happened with T-Mobile and Sprint. So we're talking about in the cases of AbbVie and Allergen, AMD and Xilinx, this is mainly a time situation. The cost of tying up your money over there with the minor risk of it not actually going through, right? So you have these two components. Now with something like T-Mobile and Sprint, this was mainly the risk, and there was obviously some time, but time was, not the factor driving it not going through. Is more the risk of it definitely not going through because of monopoly concerns and things like that. So these are a couple of things, and another reason why that it doesn't have to go to $23.83 right away, because there could be this idea of risk and time component being factored into the market. Now, again, I think that this is conservative in my opinion. Now, here's the thing. We can see price move around. Maybe price gets closer to $23.83. Maybe it goes above it. Maybe it goes below it for some time in the near future. This will give us an idea of where the market is pricing this. And these assumptions that we're creating, these are assumptions that I create on my own. You can definitely create assumptions on your own, and you can see what the market is doing. Is the market seeing what we're seeing? And if the market goes above $23.83, like if this goes to 25 bucks and it just starts to trade around 25 bucks, then clearly we're either missing something that this should be worth more, or SPARC is actually being factored into the equation and people are really liking this component. So this is interesting that basically when we're seeing price move, we can kind of get an idea of which component is actually being valued more than it should be or less than it should be, and we can make our own assumptions on these various parts to think about when we want to buy in. If you think that this deal and you just really don't like UMG and you think this deal should be worth less, but you think that you like SPARC a lot and this should be worth more, you can factor this in to your own equation to find out what your valuation is and when you would like to buy more PSTH or start a position in PSTH. Well, I hope you guys got some value from this content. If you haven't already, smash that like button, subscribe to this channel for more content like this, and I'll catch you guys in the next one.